Okay, MegaWhale team, welcome back to our channel. Thanks for tuning into today's video. We have some interesting stuff to talk about today. I've got a few new charts I want to show you. And initially, I actually wasn't going to do a video today, but I decided to jump in and do a video anyway, just to keep everyone in a loop because, you know, Bitcoin has moved quite a lot in the last 24 hours. It moved up a lot, it moved down a lot, and now it's moving back around that $23,800 level. So we're going to talk about that today. Before we get into it, we do have a VIP sale at the moment. We only have 8 more spots available. Only 6 spots more available to take advantage of our up to 20% off sale. To do that, go ahead, click the link down below. Join our Telegram channel and click the contact button to take advantage. Now, you can go ahead and look at all of our updates and all of our trade results from our VIP over here. And of course, if you're not interested in a VIP, this channel still provides a whole variety of different charts, analysis, videos, and a whole range of more beneficial information to keep you in a loop. Let's go ahead and dive right into it. So we're going to start on the macro, but there's a few things I want to talk about. And the first one is obviously the weekly close. Now we have the weekly close coming up in 21 hours and 40 minutes. By the time you're watching this, probably going to be about 21 hours. And in combination, we also have the monthly close. And the monthly close will be closing again, also in about 21 hours by the time you're watching this video. So we have a lot of stuff coming in the next 24 hours essentially, and this is a big 24 hours for the market because if we get this candle closing above that 200, you will notice that every single time we usually push below it and then push back above it, we do not come back down to this level. Okay, so when we close above it and push above it again, it's very, very rare we come back down to the level of which we did see on that retest of the trend line. So we saw over here on 2 examples. Number 1, we pushed below the 200, we touched the trend line, but when we pushed back above it, we never came back down to touch our trend line again. And we actually never came back down to touch the 200 again until after the bull market, after that bull market, which was over here. Same thing over here, touch the trend line, push back over the 200, close above the 200, and we never came back down to retest it. So only 2 instances, obviously 2 instances is not very much to go off when it comes to a trend, although 2 is still technically a weak pattern. So will it happen again? That's what we're putting our money towards. That's what we're thinking about, that is going to happen again, that we do get this weekly candle close. It will more or less confirm the bottom. And by confirm the bottom, I mean the probability that we continue back downwards significantly decreases. It doesn't make it impossible. I think everyone needs to understand that, you know, my original prediction was from here down. I never said anything about after that. I just said 18K will most likely be a bottom point, and it has been. We've gone up 35% or whatever, 36%. So technically, I don't really have any long-term predictions right now. I'm really actually just playing it week by week. I do think this was the bottom. Now, whether that's correct or not, who knows? Once we get the confirmation, we'll have a little bit more, I would say, supporting data. But if we don't get that confirmation and this trend line breaks, we also do have our lower targets, which we'll talk about later in the video. Although I believe that is increasingly becoming unlikely, and it's more likely that the bottom has in fact actually been in at this level that we talked about for the last few months. So there's another chart I want to talk about, and I haven't actually talked about this one much, and that is the pi indicator. And obviously the pi cycle indicator has been quite accurate at predicting these bottoms for Bitcoin, predicting, you know, the lowest price points that we saw on the previous occasions. Now, the lowest price point has not always been the bottom of this trend line. If we could take a look over here, we had the lowest price point prior to reaching a trend line, lowest price point prior to reaching a trend line, and in this instance, we saw that happen at that trend line. So obviously that has indicated that lowest price point. So what that is suggesting, it is suggesting we probably have a move upwards, and we could potentially even come back down to retest this trend line later on. But it's something to keep an eye on, but not something to worry too much about. Now, the actual chart, the big chart I wanted to talk about was the Ichimoku. Now, if we go ahead, and I'm pretty sure if we go to the monthly chart, now I haven't brought this chart up for a very long time. I can't even see my chart over here. I think it might be, my camera's in the way. There we go, monthly chart. And if we go ahead and get rid of everything on the Ichimoku cloud except the baseline, I'm just going to go ahead and make this a little bit bigger so you can see it. We can see a few really interesting things. And, you know, this is kind of that bull market trigger. And we saw that when we lose that baseline, and we saw it in 2 instances over here, we see this significant crash. And we talked about this chart months ago. You know, we talked about this chart way back in April, telling you that, you know, if we lose this baseline, like we saw over here, like we saw over here, we would see a significant drop, and we did see that significant drop. So this chart is more or less talking about the bull market. You know, when is the bull market going to be coming back? And we can safely assume that after we crash below it and then close back above it, so we see over here, we crash below it, we close back above it, that is the trigger for when the bull market begins again. And that will occur once the price crosses back over the baseline, which is sitting at around $40,000 right now. Now it's hard to say exactly where that will be in terms of price when we actually, if we get back up there, or if we do not get back up there. But nonetheless, this is an interesting indicator to keep an eye on, because every time we break back above that baseline, after closing below it, we generally enter a new rally upward. So a really interesting chart to take a look at there and just keep an eye on in the back of your minds. Anyway, so that's about the larger time frame. Nothing more to talk about on larger time frame. Of course, real quickly, if we do fail to close this weekly candle above the 200-day moving average, it would be quite bearish. It would be quite bearish if we actually close it underneath the 200. Now, the 200 is currently sitting around $23,000. The current price is $23,796 as of right now. So it is, you know, on a nice edge. It's on a nice edge. It's getting quite close. It's getting quite close to crunch time. It's definitely a time to kind of sit back and wait to see what happens and not make any rational choices. Now, if you've been following me, of course, you would have purchased your Bitcoin way down, you know, on these wicks over here, $18,000 to $20,000. And currently, if you caught that $18,000 exactly like we're talking about for months, you'd be up around 33%. So even if you hold a little bit down over here, you're still making good profit. I think, you know, you have to give yourself a bit of insurance over here and let this play out a little bit and not to be too stingy about securing the profits on this 30% move, because if it does continue upwards here, you know, you're cutting your legs off essentially for a small little profit in comparison to what you could get. That is what I'm doing currently. I am probably going to be holding my Bitcoin. If we lose 22,800, I'd be considering selling some of my spot. Of course, 22,800 we'll talk about in a second, but that does fall underneath the 200-day moving average. So let's go ahead and take a look at this chart over here. And forgive my crazy lines, I was just drawing some stuff in earlier just for fun. But 22,800, I'm going to go ahead and remove those just so we kind of declutter the chart. 22,800, the reason why I say that's significant, because if we take a look at this chart over here, 22,800 is this bottom line, or this bottom level of support, which we saw the price kind of find this support resistance zone in. So we have this massive support resistance zone over here, which we're currently really struggling with. And we can see over here, we're currently in it again, really struggling with it. We've been, you know, in it for a while now, and these liquidity spikes downwards even was just nothing more than just a crash and a pump. But realistically, you know, we can almost imagine the price was something like that. But, you know, more or less, we're still in this range. And if we do lose this range, that in my eyes would be bearish and most likely would send us back down to around about, you know, $21,000 as neckline and maybe even lower. Now, this would be very bearish. I'm not going to lie. If we do lose 22,800, I would be quite, I would be more considerate to a downside over here. If that does occur, I'd be a little bit more cautious, and my alarm bells will be ringing in my head thinking, you know, okay, what do we need to do now? What is the plan? Because in my eyes, if we do lose this level, that would constitute a actual rejection from this point. Now, the reason why I wasn't too worried about this drop over here, because I knew we had this initial strong support on this diagonal trend line. But if we look at the prices now, if we do lose this level again, it's more likely we're going to be coming down and retesting this trend line much lower down, potentially even underneath this uptrending support, which would actually be quite bearish. So again, not jumping in any conclusions right now. It's very, very early. It's very hard to say exactly what's going on. We do have this sideways consolidation with a lot of volatility currently. And obviously, if we do get this candle to push upwards on the daily past, you know, 23,800, we could see some nice upward rally for Bitcoin. Now let's talk about the upward rally, because the upward rally is something everyone's interested in. You can see over here, we are creating this massive area of high volume or high resistance in this current range, pushing up to about $24,000. Now, obviously the VRPV is suggesting a very, very low trading volume range in this entire period over here. So we are basically at massive resistance. And this massive resistance is not something to be underestimated, but at the same time, not something you get overly bullish on. I'm really making sure everyone's not a bull. Don't be a bull, don't be a bear. Just play the trend right now, how it is. Whenever you're in a range, you should be cautious. You should be playing the trend for how it is and just react on the day to day. When you flip bullish or bearish, it should be on the macro time for macro swings. Right now, we are in a massive horizontal resistance. There is literally no reason why you should be overly bearish or overly bullish right now until a direction is selected. Now, I've had 3 individual wicks above 23,800, and honestly, I thought that last one was going to be the one where we closed above, but it crashed down overnight and just came down, and that was unexpected, I'm not going to lie. No, I don't think a lot of people saw that coming because we pushed up through a major resistance, we had momentum, we were pushing into the low volume trading range, and all of a sudden, in the last couple of hours, just bang all the way back down, closing below. Not a good sign for Bitcoin at all. It wasn't looking good, and this candle, of course, isn't a very bullish candle. Nonetheless, if we do push over here, guys, we will have a very clear shot, and my prediction will be about 26,700-ish, this level over here, to $28,000 if this occurs. Okay, so that will be that rapid rally upwards. If that occurs again, right now, you should be neutral. Don't bet on anything, just wait for it to occur and play when the cards are dealt. So looking on the larger time frame, we of course do have this downtrending resistance, and this is the main downtrending resistance for the chart. And you can go ahead and click a log chart right now, but the log chart isn't going to be very beneficial for the current setup. Now, the issue of log charts are, and I love log charts, as you know, this macro trend line is a log scale chart, and that's a macro trend we're looking at many years. With the log scale over here, you could almost draw a diagonal trend line. I'm just going to show you how much as it alters these diagonal lines. You can see straight away, if we're going from a log scale over here, it's almost completely different when it comes to where these trend lines sit. And that is expected because it completely changes the value or the distance, or what should you say, the distance of moves in relation to price on the chart. Okay, it kind of condenses everything to fit scale. That's what the log scale is used for, to large time frame trading. If you're looking at this over here at the moment on the standard chart, we don't have any diagonal resistances at the moment. All we have at the moment, the only reason why we're rejecting isn't because of any diagonal resistances, although on the log scale it can apparently seem like it is because we are in this major horizontal range, which we did retest over here and found a lot of resistance in. As simple as that. This is the range we're looking at. We're not looking at any diagonal resistances. We're not looking at any trend lines. We're looking at this range primarily, okay? That is pretty much all I want to go over. Let's go ahead and take a look at the small time frame and just see what's happening, because this is exactly what I was talking about before. Get rid of the VPVR. This crazy push upwards. Everyone was like, this was insane. That was a crazy like 5% move, crashing back downwards. And again, no need to be overly bearish, because number one, we're still above the 200, okay, on a weekly. We're still within the support resistance range. Again, this is all support right now. We pushed to the top side. We've already broken that. We're now pushing under. We're in support. This is all support. All of this is support. We lose support when we lose 22,800. That is when I'm very worried. Now, it's very hard to say exactly what's going to happen here. Like I said, 23,800 is still acting as that major resistance. Although we do have support below us, we now have immediate resistance above us at 23,800. And you can even see in the last 2 hours, we've had these wicks upwards, no candles closing above. So it's really up and down right now, guys. I'm not gonna lie, the price is really up and down. I can zoom out, I can bring up all the technicals in the world to show you what's happening if I wanted to, but I feel like there really isn't much need. The only thing you should keep your eyes on right now is this range. Wait for the break, wait for the move, really wait for that weekly candle to close, see what happens, and then just continue from there, okay? I'm gonna go ahead and leave it there. I think that's all I want to talk about. Maybe I'll just go ahead and bring up the DXY. Let's just take a look at this. Obviously, bullish momentum over here. So for the markets, for the risk assets, we are seeing a DXY drop, which is obviously a good thing. We're seeing the 10-year government bond yields drop, which we've already talked about already, which is a good thing. It signifies weakening of the dollar. So this decreasing over here signifies weakening of the dollar. All right, weakening of the dollar is represented by the DXY over here, weakening of the dollar as money flows from the cash, so from cash into assets, okay? And that is why Bitcoin has increased in price and why stocks are up and why everything's up, because of what is happening over here. So the bond yields are quite telling. And if they continue downwards, there's no reason why Bitcoin won't continue upwards. And I think another thing, guys, don't get too caught up on the short term. I see a lot of people, and even in my own little community, my own little group chats, I see people literally flipping like, all right, so we've been, we're obviously bottomed over here. We called the bottom over here. We said buy, whatever, we're up a good amount. In this period over here, I have seen people flip bullish to bearish to bullish to bearish to bullish to bearish, literally like 20 times over. And there's literally no reason to, because this is such a short-term move. Look at the size of this move in comparison to everything else. It is so insignificant. Although it's significant in terms of where we are, the actual move isn't very significant. What the significance comes from where we actually go from here. Do we continue and break down this resistance? Do we continue and break upwards from this resistance? That is where the significant lies. So zoom out. Stop thinking irrationally. Stop jumping bullish to bearish, bullish to bearish. In reality, the best way to trade is not to have any bias. You shouldn't be bullish or bearish. You can expect downtrend, but you shouldn't be biased towards it. You can expect uptrend, but you shouldn't be biased towards it. That's a really important concept that I really hope that everyone really takes on board. So over here, guys, don't flip bullish to bearish. Just wait it out. Just be patient. Sometimes the best thing to do in trading, and sometimes the best advice you can receive, and although it sounds, rational and ridiculous, it's to sit on your hands. And, if you take 50% of the traders out there, and if they just learn to sit on their hands, 50% more of the time, they'd be immensely more profitable. Sometimes doing nothing is doing everything, and you don't need to be trading every single day. And I do suggest trading every day with a very small amount of capital to practice. You need to be practicing every day. But if you're going to be out there trading with high amounts of capital, high amounts of your portfolio every single day, it literally is going to take 2 or 3 bad days in a row and you're going to be ruined. So you don't need to be trading every day. The market is not going anywhere. If you miss a single move on Bitcoin, it's not the end of the world. Look, if you miss this move upwards, thankfully we didn't. I think we caught this trend line like 21,108 on a scalp on a long trade. But if you miss that move, it really isn't the end of the world. Just zoom out. Look where Bitcoin is. Look how much it can go up in reality. Look how much it can go down in reality. There's so many more moves coming for Bitcoin. And if you're going to be stressing out, to the point at which you feel sick even, about these short-term moves, you're not going to make it into space, because the market is always going to be moving. Regardless of what happens, regardless of where you think it's going to go, what you want it to do, it is always going to be moving. So you have to kind of desensitize yourself to the fact that Bitcoin, or in general cryptocurrency, is going to be moving, and sometimes it's going to move without you, sometimes it will move with you, sometimes it's going to move against you, and that's just the reality of life. So you have to kind of desensitize yourself to the fact that the market is ever moving, and this is particularly a little bit more intense in these 24-hour markets which are open 24/7. There's no breaks. Sometimes it's kind of hard, especially when you're going to sleep or you're busy, to keep up to date with everything. But it just draw yourself back to reality and think, if I miss a week, if I miss a $2,000 move, if I miss a 10% move, it doesn't matter at the end of the day, because even if you were there, were you going to take it? Were you going to jump in? If you did jump in, would you sold early? Maybe if you jumped in, it went down. So like there's always different questions you can ask yourself. But hindsight is a bitch. That's all I'm trying to say. Anyway, thanks for tuning in today, guys. Remember, VIP sale, Telegram link in the description. I hope you enjoyed, and I'll catch you in tomorrow's video for the weekly close. It's going to be a big one. It's going to be an interesting one. Really interested to see what happens with that one. Obviously, Bitcoin has kind of done exactly what we said. And, as of now, right now, I'm really trying to move myself away from being this crystal ball, as you per se. I'm not much of although I do predict macro trends, I don't really like personally to predict macro trends. Like, for example, if I wasn't doing MegaWhale crypto, if I wasn't having Telegram or YouTube or whatever, Twitter, I probably would have never even gone to the extent of making this prediction all the way down, because personally, I just trade day to day. I don't really care where the price goes. I just trade the current trend. So I'm going to kind of lean away from making any more macro predictions. I think right now I've made my stance very, very clear. I think the bottom is more likely in than not. I think we have our invalidations for that, meaning that if we do lose these significant levels, which obviously are 22,800, we can see short-term down. If we do lose 17,600, we're coming back down into this range potentially with maybe $16,000 bottom. Okay, that is my stance. Obviously, for the uptrend, we flip macro bullish when we break out of this macro descending channel. It's really simple. Macro descending channel over here, we flip macro bullish when we break it. We have to break the downtrend to turn bullish, okay? Everyone's getting caught up about being bullish or bearish right now, when in reality, we're still in a macro downtrend. There's no need to be bullish on the macro. You can be bullish on the short term, but then again, only be bullish on the short term currently when we break 23,800. Your chance to be bullish on the short term was over here. Your chance to be bullish on the short term was when we break this neckline. And now again, your chance to be bullish on the short term is when we break above a daily close above this level. Until then, it is resistance. It should be treated as resistance. And at the moment, all we've done is we've pushed up into the next range. We don't know if we come back down. We don't know if we push back up. Okay, keep it simple, keep it stupid, keep it easy, and I'll catch you tomorrow. Cheers. Okay guys, we're going to be taking a quick look at Bitget, and now Bitget is where I personally trade. I highly recommend signing up to Bitget with the link down below. Bitget is probably the best exchange out there if you are a trader. It has a variety of features, and the best things about Bitget are a few things. Number one, it's non-KYC. Well, KYC is completely optional on Bitget. Now, there's a whole variety of exchanges out there nowadays that have gone completely centralized, sharing your personal trading information and information of decentralized governments and different governing bodies. Bitget allows that option to be left to the individual, to the user of the exchange. You can decide to non-KYC, you can decide to KYC. It's completely your choice. Another really beneficial thing about Bitget, and the biggest reasons why I'm sitting here actually recommending Bitget to all my followers, is that it has 0.02% trading fees. All right, this is significantly lower than any other cryptocurrency trading exchange out there. FTX, Binance, can name a bunch more, KuCoin. It is significantly lower, by 500% lower than the lowest exchange out there, Binance. Another big thing, guys, is there's no global restrictions on who can use Bitget. Anyone from anywhere can sign up to Bitget and get access to the entire exchange of all the tools, whether it be futures or spot. No matter which country you're in, you can use futures and spot. If you're in America, for say, and you want to get access to more spot trading pairs, such as Binance Global, and you can't sign up, well, guess what? They've got 250 different spot trading pairs here on Bitget to get access to, and you can get access to all of these. If you're in Australia and you want to access the futures market and you can't trade futures, you can do it here on Bitget. You can get access to the future market and start trading with leverage. And finally, guys, if you do want to sign up to Bitget, go ahead, click that link down below to sign up to Bitget, and you'll get access to the reward center over here, which enables up to $4,000 in rewards by completing 5 tasks. All right, guys, we'll get back to the video. Thanks for listening to that. Okay, guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.